Hello, everyone. Welcome to nationsindexes.com. We're the world's leading independent provider of volatility and option cost indexes. We created our suite of indexes to make you a better trader by allowing you to quantify what has been subjective so you can trade with knowledge and insight, not just opinion. Our flagship volatility index is VolDex. So let's dig into VolDex and learn how it can provide unique insights and make you a better trader. VolDex is an improved measure of expectations for near-term volatility. That means you're already trading with greater insight. VolDex calculates implied volatility by focusing on at-the-money options. That allows you to know precisely which strike prices are driving any changes in VolDex. Specifically, VolDex uses the first in-the-money and first out-of-the-money puts and calls in the two Friday expirations, bracketing the moment that is 30 days from right now. What's the benefit to you as a trader? For one thing, you won't have to spend any more time guessing what your volatility index is really telling you. As we'll explain, it's impossible to know what VIX is really saying due to the way it is constructed. You're probably asking, how is VolDex calculated and what makes it different from VIX? As you can see here, VolDex targets a very specific portion of the option skew. The skew is the complete range of all strike prices listed. But VolDex focuses on just the at-the-money portion of the skew. That makes VolDex more usable and its results more meaningful. You can see a representation of the strike prices we use in calculating VolDex. Notice they are the first in-the-money and first out-of-the-money strike prices listed. You'll also notice VolDex doesn't use deeply out-of-the-money options, which can negatively influence the resulting index value and lead to confusing results. Specifically, VolDex is calculated using a closed-form methodology that focuses on the most important options, at-the-money options. VolDex uses the option midpoints for the first in-the-money and first out-of-the-money put and call options with expirations that bracket the moment 30 days from now. These option prices are interpolated to provide an understandable, intuitive measure of implied volatility. At Nations Indexes, we also calculate 7-day VolDex for all underlyings and 1-day VolDex for the S&P 500. In contrast, legacy indexes, like VIX, use nearly every out-of-the-money option listed in the relevant expirations. VIX is what most people think of when they think of a volatility index, but there are a number of flaws incorporated in the way VIX is constructed that makes VolDex more useful for investors and traders. Let's learn a little more about that. As you can see here, that means it's impossible to know what VIX is really telling you, because if VIX is higher because traders are buying deep out-of-the-money puts like these, well, that tells you something. But if VIX is higher because traders are buying call options like these, that tells you something very different. However, it's impossible to know which is the case. Is that really the sort of volatility index you want to rely on? One that makes it impossible to understand what's going on in the option market? We didn't think so. This aspect of the VIX methodology creates other problems for users. First, it uses a variance swap methodology, which is why it uses nearly every strike price listed. On any given day, approximately 40% of the constituents don't trade a single contract. Even worse, because of the weighting process VIX uses, deep out-of-the-money put options have relatively greater influence in the index value. Do you want a volatility index stuffed with teeny options that don't trade, or do you want a volatility index that uses the most important, most liquid options available to traders and investors? That's why we created VolDex. While all our indexes are available by subscription at nationsindexes.com, Large Cap VolDex is available in real time from most outlets. The ticker symbol is VOLI. VOLI has been providing insight since 2014, and VOLI's history goes back to 2005, meaning it covers bull markets and horrible sell-offs, so it provides context across a number of market regimes. VolDex can help you take advantage of our unique insight. Here you can see important historical statistics for Volley. This will provide context and help you trade with data, not intuition or hunches. No more saying to yourself, "That seems high" or "That seems low." Now you'll know. At Nations Indexes, we calculate VolDex on a wide array of underlyings and make them available to you so you gain insight into equity indexes, treasury bonds, Bitcoin, precious metals, and the most dynamic stocks in the American stock market. Nations Indexes. Better ideas, better indexes.